Well, for more on the bilateral economic ties between China and the US, we're joined by Dan McClory, Managing Director and Head of China for Bonwick Capital Partners. Thank you very much for joining us.
Thanks, Rochelle.
So, Dan, what have really been the main sticking points that are keeping the two sides from reaching a deal on the BIT?
I really think they are factors beyond the control of the participants. I think we're coming down to almost political factors with the election cycle in the U.S. and some of the rhetoric that's been going on about China trade. So I think, as well as this being sort of the final attempt by the current administration in the U.S. to try to put together an agreement. So those are factors beyond the willingness of the participants in the dialogue right now to get something done. But there was something important that was mentioned in the prelude to this interview, and that is, you think of the bilateral investment treaty as almost a passport that treats each country's businesses equally, that doesn't discriminate in either direction. And of course, this is something that's been on it, and many say this could be one of the most important outcomes.
Another thing that will be key, obviously, are the investment in the US-China bilateral investment treaty. So which sectors are being most closely watched?
It's got to be sectors that involve issues of national security for either country. And remember, good way to think about it is this is a bilateral investment treaty for anything but, and then the but is whatever ends up on that negative list. In China, there are some other industries that are protected, such as publishing. Also, you would find financial services as being another one, and things such as news outlets. These are areas that are being looked at, and again, there's not a whole lot of interest or request on the part of U.S. firms to get into those industries, but those are sort of natural ones that you would tend to find on the negative list.
Now, Dan, we did also touch on this issue of transparency when it comes to regulations in China. Is that the biggest concern for U.S. investors?
I think it's a major one. If not the biggest, it's got to be a major one. But I think, Rochelle, it's as much a perceptive issue as it is a real issue. The outlook of a lot of U.S. corporations is that in China, because there's such a strong emphasis on state-owned enterprises that have government access, that perhaps they receive preferential treatment, at least in the eyes of U.S. companies, whereas that phenomenon really doesn't exist in the U.S. So there's a feeling that there's not as much transparency because these are quasi-government institutions than if they were purely private sector companies.
Now, let's also look at the flip side. What about for Chinese investors who want to invest in the U.S.? What are some of the challenges that they're facing?
A lot. And again, it revolves around matters of actual or perceived domestic and international security. You've seen it in high technology products. Recently, right close by here in Southern California, Western Digital was attempting to bring on almost a $4 billion Chinese investor, the Tsinghua Univision Group. And they were thwarted in that because it was seen as having technology that perhaps the U.S. didn't want to allow China to have access to. So that telecommunications is another area. Anything having to do with wireless and internet. Those are ones where Chinese companies have met what some would say undue resistance in trying to enter U.S. markets.
So Dan, with that,
easy investments have been things such as real estate, which is very straightforward, and there's no balking at that at this point.
Now, with that being said, as you mentioned tech, we also see that China is facing these tech import limits to the U.S. What are the odds that we'll see any change on that stance?
I don't think we're going to in the near term. I think, and again, this is more a part of the current presidential election cycle and political environment in the U.S. where neither party, neither candidate wants to be seen as being overly accommodative in that regard. Even if there are the best intentions of those who are going to sit down and work on these items and try to bring them to closure next week.
And in terms of expectations, how do you think this is all going to resolve itself? Do you think at some point in the near term we'll see this actually resolved and have everything finalized?
I think it's going to get finalized after this election cycle. I think, as a lot of people have pointed out, the one thing we can agree on is that both of our top finance officials are named Liu. We have Mr. Liu, who is the finance minister in China, and Mr. Liu, who is the Treasury Secretary in the U.S. Other than that, I think it's going to be very difficult to come to agreement on a lot of the substantive issues in the near term because of political considerations.
And just lastly, any sort of investment trends that you're seeing that perhaps people should be aware of that maybe haven't been on people's radars?
Well, clearly, it's the continued emphasis on China outbound investment and also the rationalization of state-owned enterprises. And those are a couple powerful themes, because not very many of the state-owned enterprises in China have gone out. And part of Mr. Xi's platform is he really wants to see the internationalization of those companies. So you're seeing this take place in not just traditional areas like manufacturing, but you're seeing it, of course, in hospitality, financial services, and many other service-based industries.
All right, we'll have to leave it there. Thank you for joining us, Dan McClory, Managing Director and Head of China for Bonwick Capital Partners.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.